Good, good, good. Well, I appreciate the opportunity to share some ideas with everyone about performance development and the role of journaling in accelerating our performance. You can see my name here and the URL for TraderFeed. My contact information is on the index page for the blog. And so if you have any questions that we can't get to today, then feel free to email me and I will be happy to respond and help out in any way that I can. Okay, so let's get started, and then we'll have plenty of time for questions, answers, and discussion. I'm going to start with today's stock market in the U.S., and I'm going to use that as a little example because I was trading today and caught the strength early on in the New York session. And some things evolved during the session. What we saw was that the S&P made highs on the day. We're getting larger than usual selling pressure in the small caps. The advanced decline line for the day started to drift lower. And after a while, we started to see some weakness in the NASDAQ issues and in several of the S&P sectors. So what happened was we had early strength. It was pretty uniform, and gradually that strength started to ebb, and that led to some significant selling in the afternoon. So we want to be able to observe the entire market. If we're going to have a trending market, then the rising tide should lift all boats. All the sectors of the market should be going higher. When we saw divergences during the day, and particularly small caps, and particularly with that advanced decline line drifting lower, we recognize that it's not a trending day, and in fact, it will be vulnerable to reversal. And so we can change our mindset, change our view, and take advantage of all those buyers who are trapped and who will have to stop out. And in fact, that's what happened. In fact, if we look at the distribution of the New York tick, which is the number of upticks minus downticks on the day for all NYSE listed shares, we can see a dramatic shift from a positive balance to a negative balance. Now, how is this relevant to journaling? I was able to catch the early strength. I was able to identify and catch the early weakness. The last move down that we had, I did not catch. We were trading in a narrow range, and I felt that to short covering, and so I stood aside, and in fact, we did sell lower. So I am now going to be reviewing to see where I might have caught that move, where I might have improved my performance. And that is going to anchor my journal entry for the day. So it's an example of how we use journals to identify what we've done well, what we can do better, how we can make improvements. Yes. No, and I just gave some background for today's market. Everyone can pull that up for themselves if they're interested in doing. Yeah, and my purpose right now is not in teaching people how to read intraday shifts in the smooths, although I'm happy to do a program on that at some time. I do trade the stock index futures and the indexes, and what I just mentioned are a few things I look at. But the big point is that I'm reviewing the day, identifying what I could have done better, and learning from that, so that each day is learning. Okay, so let's talk about how I, as a trading coach, as a psychologist working with traders, use journals with the people who I work with. At one firm where I work, SMB, what we do is we create daily journals. Now, these are frequent traders. These are very active day traders for the most part. And so the journals are going to be daily to review their performance. If you are a trader who trades less often, then you might have a weekly journal. If you're an investor who trades less often, you may have a monthly or a quarterly journal. But the idea is that the journal is your immediate resource for reviewing performance, tracking positive and negative performance, what you did well, because we want to learn from what you did well, and negative performance, what you could have done better. And out of those observations of positive and negative performance, we are going to create goals for the next day, or if it's weekly, for the next week, and so forth. So we're going to create goals, and as you can see on the slide, those are going to be single goals. Now, there's a lot of psychological research on goal setting, and it turns out that goal setting is not particularly effective if we set too many goals. In fact, on average, we are much better off setting one important goal and working on that intensively than setting another goal and so forth. So what we do in the daily journals is we are working on a single goal and we grade ourselves on the day. How well did I perform relative to this goal? A, B, C, D, F. It's a report card. Then I'm grading myself. I'm setting the goal. I'm grading myself, tracking performance. But that's not enough. We've got to turn the goal, we've got to turn the grades into concrete plans for the next day or the next week or the next quarter. And so the goal becomes a plan. Just like if we called a timeout in football or basketball, we call a new play, that becomes our plan going forward. Too many traders keep journals, and what do? They write about their day, they summarize their day, and they emote. They talk about how they missed this and how the market fooled them and how they did this thing wrong, and they never get to the point of focusing on a single goal. And even if they have a particular goal, do they really lay out a concrete plan for the next day to work on that goal and carry that plan forward? So what we want to do is make our journals hands-on planning devices that we use day to day. Very, very, very often, traders who keep journals don't get to the point of making them concrete and planful, and so they don't get the full benefit of journaling. Okay, so what do we grade ourselves on? One thing I've found to be very effective is to create categories for our grading ourselves. So we don't just give ourselves an ABCDF for the day. We break down our trading into a few basic categories and we grade ourselves on each one. So I put down 4 categories that are very common among the hedge fund portfolio managers I work with, who will usually keep monthly journals, and set monthly plans. The first area that they grade themselves on is idea generation. How well did they come up with trading ideas? Did they come up with good ideas? Now, for the day traders, this might be how well did they identify stocks or futures contracts that were particularly promising for that day. Idea generation reflects the quality of research that goes into trade, and it reflects the degree to which we identify opportunity. Now, once we have an idea, we have to turn that idea into a trade. And so we have grades that we give ourselves for our entries and for the sizing of those trades. Now, the entries we can track over time with metrics that reflect our adverse excursion and our favorable excursion. In other words, after we enter a trade, how far does it tend to go for us and how far does it go against us? How much heat do we take on the trade? How good was our entry in terms of maximizing reward relative to risk? And sizing reflects how much risk we want to be taking in that trade, because as part of our next category, risk management, we're going to set a level that tells us where we are wrong, where we get out of the trade, where we stop out. And so we want to decide so that the losses we would take if we're wrong, and of course we're always wrong on occasion, the losses we take would be sustainable, would not knock us out for the day, the week, the month, and so forth. So we are grading ourselves on our entries and our trade sizing, but we are also grading ourselves on how well we manage risk and how well we manage those positions. Do we effectively scale into the trade or scale out of the trade, depending upon how we manage positions? Some people are very good with their entries. They size up larger, and then they actively scale out of the trade, grabbing profits as it goes their way, building cash flow during the trade. Others are not so pristine entries, and they may add at better levels in order to get a good average price if the position moves their way. But we have rules about position management based on the trader's strengths, and the grades reflect how well they perform relative to those rules. And finally, self-management. The traders give themselves a grade. How well they're managing themselves. Are they keeping themselves at a good level of focus, at a high level of energy? Are they managing home lives well? So this is the psychology part. How well are we managing our time? How well are we managing ourselves so that we are in a peak performance condition? The psychology research tells us that we perform best if we maximize our positive experience. And we do that in 4 ways. By engaging in activities that make us happy, by engaging in activities that are fulfilling, by engaging in activities that give us energy, and by engaging in activities that bring us closer to people we care about. Those are the 4 big drivers of positive emotional experience. Do we do things that are fun, that make us happy? Do we do things that are meaningful? Do we do things that stimulate us, that give us energy? Do we do things that support the relationships most important to us? And so we grade ourselves on those 4 categories as part of us evaluating our self-management. And in any of these areas, from idea generation and sizing to position, risk management, and self-management, we give ourselves a grade and we identify specifically what we've done well that we want to continue doing and what we could do better. Those form the goals and the plans for the next day. Now, most traders I've worked with keep journals and keep journals to themselves. And that is a limiting strategy. What we have found at several places where I work is that sharing journals greatly increases their effectiveness. So as you can see on the slide, sharing your journal with a mentor, if you're in a training program and you're learning from a senior trader, you're sharing your journal with a mentor who will give you feedback about what you traded, how you traded, to help you in your formulation of goals and plans. Sharing a journal with a trading coach like myself. Every single day with the day traders I work with, every day traders are sending me their journals and I am commenting on them. And their mentor, Mike Bellafiore, is commenting on them. So every single day they're getting feedback about what they could do better, what they could set as a focus for the next trading day. But they're also sharing their journals with their teammates. The traders are organized in teams. The teams are led by senior traders. The developing traders are part of those teams. And everyone shares their journal with each other for commentary because that creates what we call social learning. We learn from the examples of others. So if I'm looking at your journals and you're looking at my journals and I see your plans and you see my plans and there are lessons learned on your end and my end, we are learning each other's lessons. We are gaining experience vicariously through the performance of our teammates. So what we are doing is creating an exponential learning function. Every single day, we're learning not only from our performance, but from the performance of everyone else in our network. And this could be done through online trading communities. This could be done in proprietary trading firms. But the team journaling maximizes, accelerates the learning. It is extremely powerful. Let me back up for a minute. I wrote a Forbes article very recently, and it's become a popular article. And I addressed the issue of what percentage of traders actually end up succeeding, making a living from their trading. And I was very pleased that I got some comments and ideas from people reading the Forbes article, including the chartist Peter L. Brandt, who cited research at a firm that he was working with, where the percentage of traders that are ultimately successful, this was in Forex markets, making a living, was somewhere on the order of 1.2%. In the research that I ended up summarizing, Brad Barber and his group did some work with all participants in the Taiwan Stock Exchange. After a 3 to 4 year period, 90% of all individual traders had blown out. So 10% are left. We don't know that those 10% were all consistently profitable. It's easy to believe that that could look like 1.2% also. The point here is that many are called, few are chosen. That many of us pursue trading, but in fact, the number of people who can make their living from trading is a small percentage of those who engage in trading. Just like the number of people who make their living from golf is a small percentage of people who golf. the number of people who make their living from their music, small percentage of those who actually play instruments and sing. To be able to make a performance craft is truly an elite accomplishment. To increase the odds of your success, you need every tool, every technique possible. And so when we talk about using journals, when we talk about team journaling, what we're trying to do is increase the probability of your success. Because at every firm where I've worked that trains developing traders, the success rate has been significantly higher than that 1.2%. There are things we can do to increase the probability that we can be successful, and the right kind of journaling is certainly one of those things. So, what are some best practices for journaling? Journal entries should be succinct. If they're too lengthy, they don't follow through. Journal entries should be focused. Like I said, one goal. Focus on one goal. Focus on performance in categories that we're looking at. The journal entry should be practical. What did we do that we're learning from? What could we have done that we could learn from? And how could we create a plan for the next day based on what we've observed? Those best practices include sharing journals. I mentioned a team context, and the best journal entries are cumulative. What do I mean by that? Cumulative means we not only look back to yesterday to create goals today, we look back on the previous week to create goals back on the previous month. We review our past entries so that we're constantly learning and relearning from our performance. Okay, so let's take a look at the monthly review processes. Can you hear okay? Is there an echo?
All good at the moment. Just keep the phone close and we'll be good.
Okay, very good. Okay, so we're taking a look at monthly reviews and how we pull together the daily report cards, the daily journals, to create bigger goals and plans for the month. So what we do is review each day's report cards, journals, and we create an overarching goal. Remember, we talked about having a single goal to move us forward. So each month there is a new goal based on what we most want to improve in our performance. We pull together the feedback of mentors and coaches. And again, that's either in an online community or at a proprietary trading firm. We pull together those daily journals and we pull together trading metrics. So each month we're collecting statistics on our trading because very, very, very often those statistics reveal the very things that we most need to work on. So we're always revising our old goals and setting new goals for the month. Here are a few of the metrics that matter most in my work with traders. So is the win percentage, how many winning and losing trades you have during the month. We then look at the average size of the winning and losing trades. We look at P&L as a function of time of day. And we look at P&L as a function of the strategy we trade Okay, good. Okay, so we're looking at the number of winning trades and losing trades, the average size of winning and losing trades, because trades relative to winning trades, then that's often a sign of overtrading. That's why we want to look at a P&L by strategy, because we want to see what strategies are working, which ones are not working, so that we can focus the next month on the strategies that are producing the profits. The average size of the winners and losers is very important because it reflects our risk management. Sometimes we can have a large number of winning trades relative to losing trades, but the average size of the winners is small relative because we're letting losing trades run. And so that becomes a focus for the coming month, working on risk management when trades start to go negative on us. By time of day is very interesting because many times momentum and trend traders will do best during greatest periods of liquidity. So when we have a good amount of volume in the market, they tend to perform better because that's when institutional participants are dominant and will create directional moves. So many times we will see a trader who's relatively flat on the month, but if you isolate their trading during the day, they're quite profitable, which tells us to accentuate their trading with liquid periods, pull back and trade much less when there's less liquidity. So, what are some things I'm seeing out there in the trading world based on the journals that I review, the traders that I work with? The first lesson is what you trade matters. In other words, if you are one of those momentum traders, trading instruments that have significant volume and volatility will much more likely make you profitable. What you trade ends up being as important as how you trade. When you trade matters, like I said, during the most likely times, during the time when the moves are most likely to occur, position management matters. In lower volatility markets and lower volatility times of day, the positions as they go your way, price confirmation, ends up being a dangerous strategy because we get biggest just as positions. Okay, so I'll run through the remainder, and I apologize to everyone. I have not had this problem before. I'm not sure what's going on. So position management matters. How we enter our positions, particularly as a function of the volatility of the market we're trading. Risk management matters. Many times we see traders getting biggest in their trades when they are most confident, when they have the highest conviction. But in fact, it's when they're most confident and have the highest conviction that they're also most likely to be overconfident. And so they get biggest just as they're most overconfident. That's a pattern that we can identify in the trading metrics that ends up being very helpful for framing as monthly goals in our journaling. Mentorship matters. Getting feedback about our performance from more experienced traders. And innovation matters. When we develop new setups, new ways of trading, new strategies, tracking their P&L separately, having a separate set of goals for the new strategies that we're learning, that helps us innovate effectively. And that helps us adapt to changing markets. At the end of the day, what we find is that metrics reveal our psychology, that we can infer many things about our psychology from the numbers generated in our trading. We can find out if we're over trading. We can find out if we're overconfident. We can find out if we're not taking enough risk. And grounding our self-assessments in our metrics is extremely helpful in setting effective goals and plans through our journaling. So with that, I'm going to pull back. And again, sorry for the audio problems, but I would be delighted to entertain questions for the remainder of our time.
Okay, Brett, let me just go through the questions. I've got a few in the email as well, so let me just go back to the top. 1 second. Okay, so G-Trader is saying, if you're an intraday scalper scaling in and out on various time frames, how do you keep track of performance? He's saying you have to kind of do it in real time, but then that takes the focus away from trading. Any feedback on that is appreciated.
Yes, if you're a very, very, very active trader, then it is difficult to capture everything in a journal. Obviously, you can, with the right platforms, still collect your metrics. That's something I did in Chicago, working with very active traders whose average holding time was around 3 minutes. The software will capture metrics on the trade, so you can learn from that, do a download at the end of the day. But what we do when you have very many trades is we focus on the 1 or 2 best trades and the 1 or 2 worst trades as far as learning what we're doing well and what we need to do better. So we create a focus based on best performance and worst performance.
Okay, thanks for that. Just going down the questions. Right, Graham's asking, it's not really about journaling. He says, are algos making it more difficult for individual traders?
Are algorithms making it harder?
Yeah.
Yes, clearly markets have become more efficient, and we find that the odds of trading success are greatest in the least liquid, least efficient markets. So, for instance, among the day traders, we find day traders making significant money trading very small cap stocks. They're so small in their capitalization, their float, that the institutional participants in the algorithms can't participate. And the order flow in those tends to be more orderly, and traders can read that and are more likely to succeed. Yes, I do think algorithmic participation and institutional participation does affect market efficiency and the challenges of being profitable.
Thanks, Brett. Right, next one. So talking about goals, somebody's asking, are you saying you have to have a new goal every week? Like if we're reviewing today's performance, why would we change the goal for tomorrow? I guess he's thinking it might be shifting sands all the time.
Yes, and it depends on the frequency of your trading. So with the hedge fund portfolio managers I work with, they really set goals monthly and quarterly, and they're working on single goals. Among the day traders I'm working with who trade actively, they find that doing a monthly review on top of their daily journaling is effective, and they will have overarching monthly goals. So they're working on one monthly goal each day of the month. But as they go from session to session, they're still trying to learn from the previous day. So they are looking to make adjustments. What do I take away from today that I want to use tomorrow? So there becomes a smaller objective that we take from day to day, but we're working on one large overarching goal each month.
Okay, thanks, Brett. Right, so Brett's asking, Brent, how do you get back into the mood to take the next step after you see that you've already missed a 20-point drop like it did today?
Yes, and I'm a big fan of taking breaks during the trading day as a way of reorienting ourselves. And in fact, many traders I work with work on meditation techniques, imagery techniques, self-management techniques, so that during a break they can clear their head quickly, calm themselves down, and come back to the market with a fresh set of eyes. What you don't want is the frustration from one period, from one set of trades, to color, influence the next set of trades. So taking breaks is very helpful. At the end of the day, you want to be in a mindset where you embrace your mistakes, where you're not using them to get frustrated, you're not using them to get emotional. Every mistake is there to teach you something. So like I mentioned in today's trade, I missed that last shot down, that last move down. So I'm going to be going over and over and over and over it to figure out how could I have picked up on that. I'm embracing it as a learning lesson. It's there to teach me something. So either I'm going to profit monetarily on the trading, or I'm going to profit in learning. You're creating a mindset where you're always taking away something positive from the day's trade.
Thanks, Brett. And then somebody's asking a few questions actually on, can you give some examples of what kind of goals should be and how to properly construct goals? Are they dollar-based or process-based? You know, what would be a reasonable goal to set?
Yeah, very good question. Yeah, they're almost always process-based. Now, one of the goals that has implications for dollar-based is sizing. So, for instance, I have traders who have been very successful, and so we're working on bumping up the sizing of their positions by a fixed fraction, and that is their overarching goal. They're going to take more size, more risk per trade, and so their risk limits overall are bumped up. That would be one type of goal. Another goal might be doing a better job of reviewing the day before to prepare for the day ahead, creating a new review process that is more intensive, that will help prepare the next day's trade. Another goal could be expanding the universe of futures contracts or stocks that you're looking at so that you have more to select from for opportunities. So you're working on your bandwidth to have more on your screen, more in your awareness as things evolve.
All right, thanks, Brett. Does journaling include tracking performance of winners, losers, odds of winning and losing, and expectancy? Any comments on that?
Yeah, absolutely. And that's why those metrics are so important as part of the journaling process. You're collecting information that tells you, have I been trading with an edge? Is there a positive expectancy to what I'm doing? And if there isn't, what's getting in the way of that? With one trader I met with recently, he was very profitable on one or two strategies that he was trading, and the rest of the strategies he was not profitable. Mm-hmm. And so that was really valuable information that the metrics provided, so that we can now focus on those effective strategies, eliminate the others, and really accentuate, really make the most of his edge.
All right, thanks, Brett. And then Greg's asking, realistically, how many trades would you recommend that I stop and review? I think you said stop and backtest to confirm my strategy. I'm not sure backtest is the right word in this setting, but what kind of sample sizes are you thinking are reasonable to work with?
Well, with developing traders, we have them trading in simulation mode first, and we're doing that over a period of many weeks if they're trading daily. And so we're creating a nice database of trades. They're going to be in simulation mode for multiple months. And so they're going to encounter a variety of market conditions, mm-hmm. and they're going to trade a variety of strategies and names. And so that provides the database to say, is there really an edge there? Are they improving? Because all of the simulated trading includes the journaling and includes the metrics.
Yeah. Okay. And generally speaking, do you think a person needs to work at a proprietary firm in order to really become successful, or is it possible to do from home?
There are two advantages of working with a firm. One is access to capital. Many traders are woefully undercapitalized. I've had traders tell me that they have an account size that's $10,000 or $20,000, and they're going to make a very good living from it. Maybe they're better than all the hedge fund managers I've ever worked with, but I doubt it. Mm-hmm. If people don't make 5 times their capital year after year. And so there are expectations around access to capital can help them work with more reasonable expectations. The other advantage of working at a firm is you do have, at the right firm, it has to be the right kind of firm, is that you do have the mentoring, you do have the support of other traders, the feedback of other traders. You can join a team, like at hedge funds, you can join a team and you have the feedback of experienced people. That hugely helps development. There are some good online communities out there. I wrote about some of them in a Forbes article. And so I think it is possible to get some of the benefits of working at a firm by being in the right online community where you can get feedback, where experienced traders are showing you what they do and how they do it. So you have that role modeling to learn from. I do think that can increase your odds if you're trying to make it from home. But in general, if you look at other areas of performance, if you look at athletics, if you look at the performing arts, how many people make it on their own without any kind of training or mentoring? It's very, very, very rare.
Thanks, Brett. I've got a few questions about the journaling, so if you don't mind if I take over for just a couple of minutes, Brett.
Oh, please do, yeah.
Okay, let me just reclaim host. So I just saw a few questions from some of you on how to do the journaling. So let me just go over just a couple of the points that you made. 1 second, if I can now find Zoom and share. Okay, can you guys actually see my screen now? Let me know if you can. And you do see, I'm presuming you see the right screen. I don't see a preview. You can actually see the journaling screen with the analytics on it, right? Yes. Okay, so just a couple of things that specifically people were asking about. First of all, obviously, you probably all know, maybe you do or maybe you don't, that we actually have a journaling application. Brett's not associated on that. Brett doesn't promote products, so don't take this as you know, Brett pushing software down your throats. So first of all, what I'd like to do is just show you the version that we're looking at now, version 2, which is going to be out next week. For journaling, we're actually letting you all keep your own blog. Right, so the way our journaling application works is that the moment you make a trade, you're actually given, there's a pop-up window, and you're able to categorize a trade and enter various different emotional states, various different categories, put tags in, document the trade, stuff like that. So that's kind of the basis for your journal. You don't have to put those notes in, but it's going to collect your trade data anyway. Then with that information, we've got something we call a dashboard, and the dashboard is where you see the stats. So things like the largest winning trade, largest losing trade. You can actually see I've got 2 different periods selected here, and other stuff like performance by hour, performance by day of week is also on there. We've also got a calendar. So the way the calendar works, it's kind of your high-level view of your own personal performance or your team's performance. This is actually set to a team mode at the moment, but you can see you've got P&L for each individual day, and then you can actually zoom in particular days and actually have a look at how you performed and what impacted your performance. So you can see here at this point here when the P&L went down. We had a few economic events as the P&L went down. So that's actually looking at your performance for a specific day. So this is the screen you would use to actually do your day review. And then with all that stuff, all of those different views that you've got, you can actually share them to a blog. Now you can password protect your blog, but effectively this is how you're going to do the sharing. So this is how we kind of facilitate that sharing with other people, sharing socially, or if you just want to keep this a private blog, you can also share with your mentor. Okay, so I just wanted to go, I don't want to go over the whole product, but I just wanted to go over the stuff from the questions we asked. And you can use this with a whole bunch of platforms. If you go to the journalytics.me and independent trader, you can actually see a list of all the platforms. Yeah, you can use this in any market. You can use it with CFDs. You can use it any market basically, as long as you're using this one of these backends. If you're using MT4, MT5, NinjaTrader 8, XTrader, CQG Gain, Rhythmic Stellar, TT Rest. So any market, any instrument type. Now, one question, Brett, I've got for you is I think you've depressed somebody. Somebody's a little bit disheartened by saying, is the level of performance really required to expect some really reasonable success the same as a full-time trader compared to a PGA golfer?
Absolutely.
There you go.
Yes. I do think so. Yeah, I think the analogy with golf is not a bad one, because many people who play golf and they're not really intensively working on their game with a coach and working on their strokes and on the various aspects of the game. They're never going to reach elite levels of performance that way. And even what percentage of them really can make their living from golf? I see it as very similar to trading in that way. There are many traders who are not intensively working on the game. They don't have quality feedback from quality mentors, and they never reach that elite level of performance. And so I think those percentages are similar. And I think it's important to be realistic with ourselves about those odds. We can improve those odds with good mentoring, with good journaling metrics. We can improve those odds. At the end of the day, it's important to have a plan B if we're anticipating or hoping to make our living from trading. Just like if someone goes to Hollywood and hopes to make it as a star, I would hope they would have a plan.
Hi, Brett. I think we lost you. Did you finish, or I think we lost you there at the end?
I'm good. Were there other questions?
No, I think we're good. I think we're good for the questions now. So we're up to an hour. I think we've come to the end of the questions. We've come to a good place to break. So Brett, I would like to really thank you for taking time out for us today. For those that had trouble with the sound, I'll see what I can do to get some subtitles on the recording, and because I could hear pretty much everything, but I don't know about the recording. So thanks all for attending, and thank you, Brett.
Well, thank you very much. Again, I apologize for the problems with the audio, and please, anyone who has questions, my contact information is on the TraderFeed blog, and I look forward to being in touch.